to this bigger network because they are famous, right? What happens with that is that it is good and bad in a way, but clutter would definitely increase, right? It will lead to mental health problems, different kind of sex anxiety, you know, people always feeling that they are not enough, right? These kind of cluttered problems. So the idea is that eventually there'll be a different vertical spaces in social media networks, right, which will cater to different sort of people, but they cannot be too niche. Like you cannot probably make a cooking network, right? Like on cooks, probably. Again, not sure can be built, but just trying to give a hypothetical example over here, right? But most probably, if you target a large enough TAM, but in a different way for a different kind of purpose, there can be something which can be very well monetized as well as built, right? So with this thought, so Medial started with personal problems, for example, right? I was a kid who grew up on Quora and Reddit and Medium and these kind of internet blogs before that, right? Like my favorite website as a kid was Wikipedia because all my information was there. I used to love reading anything and everything about companies, people, authors, literature on Wikipedia itself, right? But slowly, as the internet evolved, things became weird. And especially when I was building my last company, uh, there was a mayhem when it came to, organizing myself. You have very few people to talk to. Like communities like Rise exist, right? And they exist now, in fact. Like earlier, it was even worse. But yeah, so the point was to create a, decluttered space on the internet for professionals, right? Going forward, my earlier journey looked like I had a startup back in college, which suddenly grew big. And by the end of my graduation, it got acquired. Then I spent 3 years over there, built a team of 40, 50 people. It is one of India's largest self-publication houses right now. It is called The Right Order. We have rebranded it to Indie Press now. But over there, we publish over 25,000 authors in India, still are doing well. I came out of it last year to build Medial. And Medial's journey has been a bit different compared to any other vertical that you might take. If you tried, even in Rise, if you try to see, I just recently saw a different startup on the social media domain, a video app, I guess, I don't remember the name, but there was one, right? Like recent edition. But in general, you won't see social media apps like ever coming out of India because nobody funds them. It's over. Who dying was a bad sign for us. ShareChat is not making money. VCs are convinced that social media cannot be built in India. We don't have the right talent, the right way to do it. 1% chance of probably succeeding. So nobody wants to take a bet. And in this market, after the 2021 crash, it became even worse, right? Like there is no money. Earlier, people used to bet money because everyone was like putting money anywhere and everywhere. Discord servers became some apps and they are dead now, right? But they have a lot of funding left. But that was happening back then, and I was stupid enough, despite a lot of senior folks telling me not to do this, to jump into it, thinking that I can do this, right? But we anyhow began, and there was this VC called First Check and Pratik over there, who decided that our idea was great enough, and he bet on us, right? I was not willing to, my mind was not focused on fundraising. The plan was that I will leave my job full time, right? In my previous company, step down and build the product full time, while all my other co-founders will keep their jobs and build it part-time, like we all do, right? When we gain some traction, we'll try to fundraise because you need metrics and traction for fundraising, right? But then this VC comes in, gets to know that I've quit my job in my last company. He approaches us through, oh, this happened. A lot of VCs, by the way, come to you usually when you post on LinkedIn. A bit of like probably the last startup help, but a lot of folks approach. But then I was talking to Arjit from Marshot, who's Razorpay's family fund kind of a thing. Like they invest in startups, right? 100 200k dollar checks. So Arjit had invested in a conflicting company, so he couldn't come in, but he spoke very highly of us to his peers, and one of that person happened to be Pratik from First Check. He came to us, one meeting of 5 minutes, second meeting of half an hour in his office, and he gave us the term sheet. It was that quick, right? It moved that quick. Our team's credibility obviously helped. I'll get into the nuances of what it would take to raise a round today in this market. For different verticals, it might be different. For SaaS, it will be different. For consumer internet, it will be different. For D2C, it will be different. But I'll try to cover most of your questions. But yeah, that happened. And then when we got our term sheet, that is when we started incorporating the company, right? And building the product. So that went like that. And then came this year, like 8 months later, we realized that money is not enough to, scale as such. So we had to raise another round, and raising another round without like huge progress is again a painful task, right? I'll also come to that, how coincidences might help you. But let's keep this session very, very, very interactive. I will not be able to structure it. I'm not good at structuring, but shoot your questions blindly. Any stupid question that you can come in your mind. It might sound stupid to you in your mind. It is not stupid. It probably carries weight. So be very free in shooting your questions out. I'd love to answer them. We can start with like live questions and then we can go to the chat too, or however you suggest, Manik.
Yeah, hey, yeah,
Yeah, we can just start. I think Abhishek, go for it.
yeah, hey, hi, Niket. This is Abhishek. Okay. For some reason, my video is not showing up.
No way.
I hope, yeah, that's fine. Anyways, so Niket, hi. So I'm building a product wherein we are building a ecosystem of nano influencers primarily who can work on behalf of the brands to drive sales and marketing both online and offline, right? There's a
Yeah,
phase one and phase two. We want to look at how we can uh, bring the offline transactions online through enabling the merchants also to give cashback to the users when they walk into the even smaller stores, or even the ready walas, or the the hawkers basically, correct? So from that perspective, so the product we have just launched in the market right now, 5-6 दिन ही हुए हैं, but I got this developed from an outside agency, right? So the process was wherein I built the entire UI ourselves, right? So we got the entire process done. Then we built the BRD, which is requirement document, right? Then we approached a third party agency, right? And we got it developed from them.
got it.
Okay. Now I have someone on the team as head of engineering part time, who
Mhm.
has committed to join full time once we raise funds, and
Yeah,
he is now liaisoning between this third party agency, right, to sort of get the product done. And the third party agency has also agreed to transfer the resources who have been working on this product full time to our company once we sort of we want to go in a monthly retainer basis, right?
got
So which again will happen post the funding. So is how is this situation looking like to you in terms of trying to go to the investors, getting a pitch deck, and pitching them?
So obviously, I'll be honest here. Preferred is that you have a team that builds your product, but in a lot of cases that cannot happen, wherein it comes down a lot to execution, right? Um, so one of the things that I have seen early stage investors being very particular about. In fact, my entire first round happened because my team was top notch, right? Like it was really good. We had all the components of building a social media app in place. For example, there was me who was handling product, business, legal, fundraise, everything, right? As a CEO. Then I had a head of engineering who would ideally build the app, client backend, everything, right? Then we had another guy who's a growth specialist. So he can actually work on growth, but he's also a techie who does back and front end web, everything else, right? Then the
Okay.
last guy we had was our head of infra, right? Who would ideally do infrastructure, AWS hosting, AI, a lot of other stuff. So the team was so complete that it made it easier for them to take a bet on us that these guys have built apps that have scaled to like 100K, 500K DAOs earlier. So most probably they'll be able to build it again, right? If it goes well. So that definitely makes it easier. But in case you are outsourcing your tech, be very sure to convince them that you have the right techies in your pipeline who would join you as a co-founder once things are a bit more stable, because they cannot leave their jobs right now due to XYZ family responsibilities or whatever personal responsibilities, right? Convincing that shouldn't be that hard because a lot of folks don't have full-time
Okay.
techies to build the product. But ideally, I would suggest you the moment you close your fundraise, please get out of the contractual tech work. It never works out. I've seen people wasting lakhs and lakhs of money for building an app like mine. Somebody had quoted me 3.5 crores and a timeline of 8 months. We built everything for free eventually, right, with the right team. So that would be my input. It's a bit hard, definitely. You'll get questions. It's most more about how do you handle those questions, right? You cannot tell them that, oh, I am not being able to convince my co-founders to join full time because XYZ reason. You'll have to tell them that I have the right co-founders. They are at a certain level. I will bring them in, but till then, to prove the POC, I was outsourcing my work. But that's how it'll go. It wouldn't be a big problem if you handle your questions smartly. Never appear weak in front of them. Just tell them that it was a smart decision taken by you and you have full conviction in your decision.
Got your point. Acha. ठीक है, thanks.
Can I go?
Karthik, yeah, go.
Yeah. Hi, Niket. As you were saying, social media is a hard thing to fund. Uh, that's what I'm building. So
Oh,
not
that's
not social media per se, but it's social. So it's basically a social video conversation app. Uh, so that the whole idea is meet new faces from new places
is it
and
your
genuine
app? It starts with N, right? I recently saw it in Rise itself.
noon.
Noon, yes, correct. I tested your app out. Yeah, great work, man.
Thanks. So this was built in-house with 5 engineers that we hired. We just did a friends and family round at the very beginning, and that's what we've been working with. And here is the thing. So we before this we with the other founder, one of the other founders who's building Nool with me right now, we built Indie Blogger, which is the largest network of bloggers in India. We had more than 100,000 curated uh, top cream of the top bloggers of India in it. So we've built a community before. Even though we have that background, we completely did that bootstrapped. We didn't raise funds anywhere, and we had a 40-50% margin on every event and every online products that we developed. So we just were able to bootstrap for about 12 years through and through. But this is the first time we are actually building a product. Building a company for which we knew from day one, from idea stage, that we have to be raising funds because video intensive and whatnot,
I
right?
understand.
It's a no-brainer. So the one thing that I have understood from all this last 2 years of research, reading, and talking to people and everything is that you can never be too prepared when it comes to raising funds, and you can never be too careful. You do everything you can, and you'll still find blocks to stumble upon and whatnot. And in a climate where in India, specifically, and like you said, the angels or VCs are not too uh, what do you call it? Not too jumpy on investing in social media networks and whatnot. Apart from having a team that a credible team that had a full coverage of bringing this to life at your end, what else or how much the storytelling or how much of what else played a role when you were able to raise this at the idea stage? Because I too met Arjit, and that's the one who he's the one who got me into Rise community at the first time when I met him. And at that time I didn't have an app. All I had was an idea. And he said, "You guys are on to something, so I think you should be here to talk to other founders and whatnot, and we'll talk again." And I'm trying to meet him again. But what I'm trying to understand here is, apart from having a credible team like that, what else would play a role in this climate for you to be able to get any check at all? Because I
Yeah.
am going to fundraising
How much are you
now.
trying to raise, Karthik?
Sorry,
How much are you trying to raise? Do you have a number in your mind?
we are trying to raise about $500,000.
Okay, got it. Sure. I'll try to structure this. I mean, the situation is very similar. We had a Figma file with our designs ready when we raised, no company, nothing. Similar to you. We had two engineers basically working on that, very small team, just like you. I think one of the obviously the fact that I had built a startup and sold it earlier really did help, right? Because that just adds credibility. And you have also built up large blogger network, so similar case, I guess, case in point. The second thing that would help is a team which you already have in place. The third thing would be, now it would come down to your research and your conviction in the market space and monetizing it properly, right? So for example, when people will like VCs are stupid enough to ask you at pre-seed when you're building your social media, how will you monetize, right? They don't want to, but they are right in their sense, right? They don't want to know how exactly and how fast can you make money. But what they want to know is that whenever you start monetizing, you gear up with your monetization engine, how much cash can it generate, right? How big is the market, the TAM, right? So two things will matter a lot, your TAM and your first is your TAM, and second is how do you monetize, right? The revenue generation methods, right? It can be ads, it can be blah, 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 whatever, right? But you have to be very sure that this is going to work, and they have to believe that, okay, these methods are very easy. In case of Medial, it was very easy for me to convince that monetization wouldn't be a problem because the space is defined, right? We are building a professional network, and way, like not in every way, but a lot of ways in which LinkedIn monetizes or a Glassdoor or a Angel List monetizes, I will be able to monetize in a similar way, right? I can innovate on it. I am very personally very bullish on microtransactions. But yeah, it was pretty clear that, okay, if this is a base that I'm able to build, let's say 2 lakh daily active users at some point, then they will, by math and logic, they'll end up paying, right? So that was very clear to us, and that will really help, right? And the last part is how, um, how, what do you call it? How persistent you are, right? It should be very clear that even if nobody gives you any money, you are not going to leave the battlefield, right? You will build it. And for the second, not for the first investor, but for the second investor, I had 9 meetings over 4 months. My company could have died in 2 months, but the check came in, right? I was that persistent with my follow-ups. I was not too intrusive. I never disturbed anyone. I just kept, there's a way to follow up too, right? Like, what if someone doesn't reply you in a week? Do you tell them, hey, we talked last week, but you did not reply to me, so I am emailing you again? Or would it be better if you send a update on your metric that my daily active user base was 500, today is 700, just updating? They will come back to you if you go with updates, right? They will. So
Follow-up
persistent-
question.
Yeah.
Sorry, if you have anything to say, please.
No, nothing. That's it. That's it.
One follow-up question is, so with Medial, did you have to build an atomic network for it to first get the initial set of people to start using it? Or how did you go about, how did you break your cold start problem essentially?
Cold start problem of Medial would be another session in itself. I can talk to you personally after this, but that is the biggest problem in social media, right? Chicken egg problem. How do you solve it? A lot of folks before us, what they had done is, in COVID times, they had built large Discord communities, and then they digitized that community to the app. It usually fails. Most of them are dead. They are facing a retention problem. And I knew that that is not the way to go. You cannot take an existing community somewhere on some app or website and transition it into a new app. That does not happen. At least
Yeah,
I
we
can tell
tried,
that as of
we
now.
tried it and failed there also.
Yeah, it does not work. And I was very clear about it. Was an assumption. It just somehow, proved itself to be true, seeing other folks in the ecosystem. Our idea was that we'll build the app first. The entire narrative will start from the app. The entire fine tuning of content, seeding, everything else will take place from day zero, day one, right? Like nothing pre-prepared. We all had in mind what it would be on the app, but rest of it was, I'll get to you personally on this, the seeding problem. It's a very interesting problem to solve.
Okay. Arushi, you want to go next?
Hi, Niket. Thanks for taking the time to speak to us. So essentially what I'm building, we're called Just Buy. We're building like a content to commerce sort of a play, which simply put, like a platform like yours, a platform like Pratilipi, you already have content, you have distribution. We want to help platforms like that unlock another revenue stream by introducing e-commerce to your audiences in a very contextually relevant way. So for example, if you're reading a story about, or you're watching something on an OTT platform, which involves an actress wearing a sari, if you as a consumer you have sparked interest in checking out that sari and trying to wear it, you should be able to do it natively within the platform. So that's a sort of thesis. We started building this out, I think, about 3 months back, and yeah, now we have like a basic MVP ready. We have a couple of pilots running, and yeah, so now we realize that, okay, at some point we need to start having these investor conversations. So I think that's where we're stuck right now. Number one, my question is, after, just like you mentioned, after I put out like a short LinkedIn post, I got a couple of VCs reach out to me. So how do I evaluate whether it's the right time for us to reach out to them and start having those fundraising conversations and really double down and spend maybe the next 2 to 3 months and reaching out to, let's say, like 50 VCs and having those conversations? Or should I be like, okay, we're too early, maybe we don't want to sort of focus on that right now, we just want to build out the product, just want to focus a bit on traction, and then raise a larger seed later on? So just to give you some context, as a company, our ethos is that we want to raise a smaller pre-seed, about 200K, and then go on to raise a larger seed or a larger series A once we've built out the, once we've proved the concept that there is engagement in this sort of a way. So yeah, how do we go about this? Yeah.
Tell me, just clarify one thing before I answer. Does your product mean that when it is live in, let's say it's live in Pratilipi, right?
Yeah.
And someone is reading a story, they see an ad, they buy it. Do you get money out of it?
Yeah.
Immediately?
Yeah.
Cool. Thanks. So basically you will make money from day zero, right?
Yeah.
So in this case, there are two things that you can do. Now, there was this entrepreneur who raised 2 crores in 2020, and he was building a jobs platform. Just giving you context. When I met him, I had raised 1 crore, right? Back then. and he told me to shut my startup down and return whatever money is left, because nothing gets built in small amount of money. Usually, for at least platform like ours, wherein you cannot make money from day zero, you shouldn't go for a small round. I made that mistake. Somehow, luckily, I survived. But that guy failed, right? And most of the people who try to build with small money fail, because the investor pressure really is very hard, and you have to show great metrics to go from that round to next round. So if you haven't raised a round, everyone will ask you what is your traction organically, right? Or bootstrap way. But when you have raised a round, they will ask you how did you spend that money and where did you get with it. That is a problem to have. Now, in your case, it might be a wiser decision to take a 200K check, because you will generate money, right? So what I would suggest is, first of all, like the first part is take the 200 if you're getting it from somewhere, right? Do this conversation micro VCs. I would suggest go for a higher check size, 200K to 500, wherever, whatever you can get, but it's not a problem. Even if you get 200K, just make sure your team is very lean. Your sales conversions go very high, right? And the ideal focus would be to bump up those metrics enough to enable seed round, right? And if there is any kind of a virality factor, or if the product is too great, even good products sometimes don't inherently attract a lot of sales, right? You will have to put it out there. But if the second thing happens that it just gets out there and it goes crazy and gaga, right? In that case, well, seed investors will find you and they'll put money in you, right? You don't have to worry. But for now, I would suggest is that if you feel that 200K is life or death for you, or if it would really help you scale from 1x to 10x, a certain number, this number you will have to study your industry and get to it. For example, I'll take my case. I knew that if I raise 1 crore, which I ended up raising, my first perception was we will build a product, we'll get to 1,000, 1,500 daily active users, and that's it. Somebody should give me $2-3 million for seed. I was right. I came to know eventually that 5,000 is the benchmark, 5,000 daily active users. So then I understood I'll have to raise a bridge round, right? So first decide if you have, let's say, 5 different clients, how many number of clients should you have, what kind of conversion rates, what kind of money you should be making for a seed round to happen. And then you will be able to decide better whether you should raise a pre-seed or not.
Yeah. So the way we look at it, we have conviction on the exact problem statement and on the space and the concept of what we're doing. But the solution, we're looking at 3 different solutions. One is like on the basis of impressions, one is on the basis of conversions, one is on the basis of capturing first-party data for brands. So what we want to do is we want to run some sort of A/B tests or experiments with these different pilot platforms that we have to see which ones work. And we just need like a small amount of money just to figure out that out of the 3-4 different product verticals or solutions that we have in mind, which one of them stick. And then once we figure that out with that pre-seed money, then we want to raise a sort of larger seed to double down on that solution itself. So
see, 2 things here. One is that taking money for A/B testing might not really help. I really believe that if you want to run an experiment, it can be run without money until it really cannot, right? Like maybe you require talent or tech costs or whatever. In that case, you should go for the seed round. Also, do you categorize your business as a SaaS product?
It's B2B, yes, not SaaS.
If it is SaaS, if it falls into B2B or SaaS, then there is a clear revenue multiple that you will be raising on. Pre-seed, maybe you will score by luck or someone having enough conviction on your product or your space. But the moment you start generating any money, they will tell you that whatever money you are generating, MRR basis or ARR basis, 10x multiple will give you. It's as
even
simple
at seed stage?
Even at seed stage. A lot of times, right? What I'm seeing today, 1 year back, they would have given you 25, 30x. Today, it's very hard, but some entrepreneurs are still able to convince people. Video commerce especially is a very interesting space. So you might get a higher multiple, but then you will have to build your story completely from video commerce POV, right? And not as don't pitch it as a SaaS business then. Take the story in another direction. Just tell them that it is video commerce, but not on my own platform. I'm enabling platforms to become video commerce platforms. It's as simple as that. Build a different kind of a story, which is very scalable, very large.
Okay, and sorry, just last follow-up question. How do I judge? So I have these conversations, right? Like they're like 30, 45-minute conversations with some analyst at a firm. How do I judge from these, maybe I'm having 6 conversations in a week. How do I judge, number one, if there is going to be follow-up interest? And secondly, how do I judge from those 6 conversations if we're ready to fundraise, or maybe we need to pause and just build out the product? Because the reason being, sometimes we might be like too prematurely deciding, okay, we're raising and we might not actually be ready. And also because these VC analysts are generally too polite to really say, we're not going to go forward. So how do I judge that?
Two things there. I think again, this is a very interesting topic. I would have come to this, but whenever you're having meetings with VCs, in general, expect that they're going to say no. Never get disheartened. You will get rejected again and again and again. Second is follow-ups needs to be very, structured. Do a weekly follow-up, probably with an update in whatever you want, research, product, team, etc. Right? If not, if you don't have an update, then you can just keep weekly following up. Follow up till 2 years if needed, right? Like this, they will be polite. Just tell them that if there is no conviction, I will understand and stop emailing. Just mention that in your email, right? You just need an answer. Just set periodic reminders. It's that simple. I used to wake up every Saturday and mail all the VCs I had talked to. Tell me a yes or a no, or else I'm not going out of your mailbox. It's as simple as that, right?
Okay.
Most of the best conversations I had, very nice, felt that the VC has the exact vision, he understands my product. All of them said no, weirdly.
Okay.
So be ready for that. A lot of these sweet talkers will never convert. In fact, if it has to convert, it will move very fast. You won't have to follow. You won't have to do anything. They will realize the potential. They'll come to you. So you'll get into this.
Fair enough. Thank you so much, Niket. Thanks.
Yeah.
Awesome. Shubhajit, you want to go next?
Hey, thank you. Hey, Niket.
Hi.
So yeah, I'm building Nestafar in a very short form. It's a hospitality B2B SaaS product. I'll give you the problem statement. If you've gone to a hotel, the front desk will give you a WhatsApp menu from a nearby restaurant, and you order from that restaurant, and they have some chotu and some guy who brings that from the restaurant to a room. So this is the basically sector which is happening in an unorganized way in hospitality. We are building a vendor marketplace system for this hoteliers and hotels and this hospitality ecosystem, so that this vendor marketplace can be used to provide an enhanced guest experience for their guests. So this is what we are building. Now here is the challenge that I have. I come primarily from a tech background. I have been in Oracle, been in Ola, multiple 10 years of experience, heavy into technology and engineering, built multiple products over my career. Now, when I wanted to be an entrepreneur, when I came with this vision, obviously I had the technical backing to do things myself. And since I came up with the vision, I obviously knew what to do. So I became like a one-person company. Means I built the product, I understood the market and things like that. But obviously I needed a team. So what I did was I hired heavily from Internshala and I built a team with interns. Now, that had been very cost effective. I was bootstrapped, and right now we are product ready. Our product is live in Ladakh in 3 hotels and everything. But the problem is investors, when they look at us, they don't see like a conventional co-founding team where there are 2 founders with a 50-50 partnership. That's the conventional thing they look at, where they see one guy who's taking all that and there is a bunch of interns around him. We are a 10-member team.
I guess I'll get to this, right? So a single founder will never be funded.
Yes.
It's a hard truth. I'll tell you why. In my first venture, when I had raised, somehow I ended up raising. But the first question from my investor was, what if, God forbid, you are walking on the road and you get hit by a lorry? What happens to my money? It's a very harsh and uncivil question, but their money is at stake and they are very few. They have to take this, risk assessment, right? It's end of the day, they are hedging their bets, right? So whenever they have multiple co-founders, it's very, very easy for them to take a bet. Usually, so 4 is the ideal number. Anything above 4 is tricky because too many people. Anything below 4, I mean 3 and 2 also works out sometimes. But then you need to have maybe a business that just needs 2 kind of expertise, right? Or a business or 2 very credible founders or whatever, right? But single founder, there is legal issues with funding single solo founders. You will at some point, I know splitting equity is hard, but you will at some point have to get a co-founder who's good enough, and you'll have to convince the VCs then, because VCs, at least what's happening today, I don't know about what used to happen 5 years back, but today it's very hard to probably raise as a solo founder.
Yeah, Niket, I'll have a follow-up with that. Couple of months back, sometime around February, March, I had a co-founding team. We were a team of 3 guys. and we actually approached an angel VC, and he was ready to fund us. Like you said, we sent out on LinkedIn, and he was ready to offer kind of a 300-400K check. But at that point of time, we did not agree on the valuation. He was asking way too much. I wanted a 10x multiple, like you mentioned. He was giving a 3x or a 4x multiple from the projection, which was not what I expected. But the angel VC who was there, he was a regional head of Meta. So he had a lot of what you called resume behind him. I got him in our team as an advisor with some equity, and he's still advising us, still onboarded onto a team right now. But now I am here due to this decision which I took in March. I lost my 2 founders, and
So,
now
is your question how much should you dilute? What kind of valuation should you raise at in your pre-seed?
it's a mess I am in. There is a team piece missing, and then I need to solve this team piece, and then of course the valuation
So I'll
piece.
come to the valuation part. Team piece, though, you'll have to solve anyway, I guess, right? It's going to be a very rare occurrence, a unicorn appearing on Earth that a solo founder gets VC funded. Angels, I'm not sure about. They might still invest in you, right? But VCs would venture capital funds, and I'm not talking about Jito Network or these, network funds, right? Like wherein like Mumbai Angels, Hyderabad. I'm not talking about them. I'm talking about proper institutional VCs. They might not touch you, but these folks might. And with their money, you can raise you can establish a founding team, and then you can raise from VCs. But coming to valuation, again, this is going to be a question by a lot of folks, so I'll just answer it very quickly. In your pre-seed round, I'm not talking about seed. In your pre-seed round, the idea is not to get a large valuation. The idea is to not dilute more than 10%, worst case more than 15%. It will hurt your next round. Other VCs might get demotivated, and they get demotivated because your dilution will be so large by Series A that most of your co-founders will be diluted to a very small number, wherein the founder motivation gets lost a lot of times, that you won't be making personal money. So the VCs think that if the founder doesn't make a lot of money or doesn't have a lot of incentive, they won't be able to work as motivated as they could with a larger pool of equity, right? So do not go after valuation. The valuation can be 2 million or 5 million, but your dilution of equity shouldn't be more than 10 to 15%, right?
Yeah, that time it was 25 to 30%, which I did not agree on.
Thank God. Don't do it. Don't build your startup, but never give out 30% in your pre-seed round. In your seed round, this number can go from 20 to 25% if you're directly raising a seed round without a pre-seed, right? But try to keep it under 15% if it is a pre-seed of under $200,000.
Got it.
Awesome. Dheeraj, you want to go next?
Yes. Hi, Niket. How are you?
Hi there, all good, please.
So what I'm building is My Vakil. So we are building a platform for lawyers to basically manage their practices, but at the same time earn some extra money through the consultation platform that we're also integrating with the practice management software. So what I wanted to ask is, since it's an SaaS offering, so initially when I'm building the product, should I go for funds which are specifically, say for example, government funds? Because the company which I'm building from Guwahati. So we have a lot of Northeast specific funds for entrepreneurs from Northeast. So initially, to have that less of a VC pressure, should I go for government funds or should I directly focus on VC funds?
Yeah, I was in this situation. I never wanted to rate government funds because we thought that our business will actually require VCs, right? Like otherwise it couldn't have been built. But in your case, since you can actually take help from a lesser amount of money too. Now see, there is only, again, I am not the right person to answer this. I have heard this from VCs, tier 1 VCs, that whenever someone raises from the government, VCs start seeing them with a negative eye. I have no clue why this happens.
Okay.
But for some reason, grants are not appreciated in the VC circle.
Okay.
I don't know why, and I might be wrong over here. Maybe just one VC nuanced opinion,
Right.
but this is what I have heard. But I think, man, in general, you're in Guwahati. I don't think there are a lot of VCs over there. If
Right.
you can build a great project with a lesser amount of grant funding, then eventually you would be able to convince VCs. Again, everything comes down to your salesmanship at the end of the day.
Right.
Yeah.
Got it. Thanks.
Yeah, anytime. Can we take a few questions from the chat? I guess otherwise they'll never be answered.
We'll take them in the last 10 minutes.
Okay, sure. Yeah.
Atanu, you want to go next?
Yeah, sure. So Niket, thanks for taking time out to talk to us and guiding us. Thanks for that. So I'll first talk about a little bit about our scenario and would look for your guidance what we should do. So we are building into B2B space. We are cloud cost management platform. So we basically help, it's a technical product. We basically help organizations who are using AWS, Azure, GCP and all. So we help them understand where they are spending money and how they can, reduce the cost, right? So on the funding side, we have been targeting to raise around 300K. So we initially targeted around 1 million, but later on figured out that we have to break it into two parts, pre-seed then seed. So now we have reached out to almost all the popular names in the VC circle and talked to most of them. So many of the discussion went on the first round. Some of them also went into the second round with the partners. Now the feedback we have got has been almost consistent across all the discussion, unless and until someone said that, hey, we have invested into one of your let's say competitor product. So everyone has said that, hey, we like your product, we like your team, but generate some revenue and come back to us, then we will fund you. And the revenue has been somewhere around 50 to 100K ARR, something like that. So that's the range they have generally said.
100K ARR?
Yes.
100K ARR is good enough to raise 300K, man. I mean, you should be able to do this. Have you tried Upekha?
Yes, we had a discussion. No, so 100K ARR we have to achieve to get funded.
Yeah, you will have to. Yes,
yeah,
yes.
we have to.
You heard this was class that for raising a round, ideally you should be somewhere around 50 to 100K ARR. That is the bare minimum they expect to invest, like 200, 300K, because it's a multiples business. There's no dream and hope that you're selling, right? So it'll be pretty clear over there. You should ideally go for an angel round if you need money. Angels, larger angels can pull in 1, 2, 3 crores rupees easily. Maybe you will have to take in a lot of angels, but yeah, if you get one big angel, then maybe that. You can also approach these syndicate funds, like try seeing it on angel list. It should be, a lot of them are there. Then there are Hyderabad angels, Mumbai angels, Kolkata angels, right? Stuff like that. I'm also sending you guys a list of pre-seed funds, which you probably already know, but this was prepared for me back when I was supposed to raise, but then someone else came in and invested in us. I think it's there, right? Yeah. So you guys can actually, again, all of these investors invest in different, industries and stuff, but a good initial list to start with. Again, you must know a lot of others, but this is what I had, so I have just sent it over here. I have a seed list too, in case somebody wants it, I can DM it to them. But yeah, Atanu, I hope I have answered your question. If you want to raise 200, 300K without the revenue, then it will really be about salesmanship and how you're able to convince them that this has the TAM and you have the right team to do it. Maybe a few initial POCs. I know people who have raised at normal multiples, even with 10K, 20K ARR, but then there was an angle of either Gen AI or something flashy or a founding team or something else, right? Like, but if you are not coming from any of those things and plainly build a new team, then I think it will be revenue what you will be judged on.
Okay, so revenue we have to do anyway before
correct.
to get one. Okay,
Correct.
Understood. Thanks for guiding.
Anytime. Yeah.
Awesome. Vikram, you want to go next?
Yeah. Hi, Nitesh. Hi, Niket. Thanks for taking the session.
Yeah.
So, we are building precisely an edutech company, specifically in test prep domain, and we are building it since last 1 year. So we never raised fund because initially we were doing experiment, and later we thought that okay, we'll do it after getting some traction. So, but for our app, for getting traction, we need good amount of content, and we were building that content, and we are on it. But do you think a negative point, because we are running it almost 1 year, and we were not able to get revenue till now, or we have never tried raising a fund?
It depends. What is your business again? What category?
So it's in test prep domain. So basically, we in our app we provide mock test and all, and we are using AI. So
And you are not monetizing it for the first year, right?
no,
But you have a user base. Do you have it?
we have started getting traction, but not much till now, because as I mentioned that for that we need good amount of content, and we were focusing on the content first, because we thought that okay, let's develop some content and then maybe we'll do the marketing and all.
So as far as I know, EdTech
Yeah.
has no concerns with revenue multiples. it is, although people think that Byju's has completely trashed the market, people are still excited about it. There is a lot of scope, right? And if Byju's goes down, a large market will open up. So I didn't think not making revenue will impact you a lot. It will be more about how you are going to, the channel of monetization has to be unique, probably, or something that is well established by previous bigger companies, and the stickiness to the product whenever you have some traction. Revenue shouldn't be that big a problem. Just tell them why you chose not to. Again, it's your story, right? You will have to build it. So you can tell them why you came to a decision of not monetizing it for 1 year and why you thought it was right and why this is the right time to do it. So you'll have to tell them that they don't know shit, right? You know your shit. You'll have to convince them that you are right.
Okay. So I have some follow-up questions. So yeah. No, so basically, we are two co-founder, and one is doing full-time job. And actually, our plan is the same, that when we'll be getting traction, when we will raise fund, and she will be basically joining full-time. So that, I mean, and since she is working in stealth mode, so that can be some kind of negative. I mean, what I got from your earlier conversation, that is not that much.
I'll tell you something. If your co-founder is working a full-time job, that's fine. The only thing that will come up next is that they will ask you if they're interested, first of all, and if a VC likes you, what they will ask you is that when I send you the term sheet, before the money transfers, everyone will have to quit their jobs. That's the max they'll ask for. It's not a bad thing. Just tell them there are restraints, bro. They have a family or whatever responsibilities, right? So that wouldn't be a problem as such. But if you have people who are ready to come and join you as a co-founder, that's enough.
Okay. And yeah, so my co-founder is actually my wife. And so do you think any negative point if basically relatives are coming together?
And some VCs don't like it.
Okay.
Some VCs don't care.
Okay.
Awesome. Cool.
The trick is finding the ones that don't care.
Huh?
The trick is finding the ones that don't care.
I mean, I don't know, man. Apart from off business, not a lot of husband-wife duos have done well. So I think their doubts have been very genuine. But again, it shouldn't matter, right? Like, I am building the company with my brother. My brother is one of my co-founders, and he's way more talented than I am in his domains, right? So it was more about convincing them that I don't give a shit that he's my brother. More about the skill set that is required to build Medial is with him, and you try finding an engineer like that, right? I'll have him. It was not possible. So it's up to you to convince that your wife or your brother or your sister is the right co-founder for the startup. Everything else is secondary. And one of the good things with us was that despite me and Harsh being there were two other co-founders, and all our equity was split in equal terms, right? Nobody had more or less. So that gave a lot of conviction that, oh my God, okay, they are building it as a team.
Awesome.
Thanks.
Yeah, man.
Cool. Anyone else wants to raise their hands, ask questions before we move to the chat? Okay, I'm going to take that as a no. So I'll just pick up some from the chat, Niket. One is Anurag Gulati. He said, can you elaborate on your pitching process? How did you craft your pitch deck?
Okay, funny. So I believe that, again, very genuine, like cliche advice, but as you keep pitching, your pitch gets better. That is definitely true, because a lot of times you will not know answers to things, and then you will know answer to things because you know about those questions, right, in the first place. So it gets better with time. Give it time. You will have to pitch to 100 VCs probably in your lifetime, and your pitch will always keep getting better. Secondly, study, I guess, as much as you can. What does it take? You should know your metrics, your industry, what defines a good startup in your industry, why you have the right to win, why is your team complete, why is the TAM open, why nobody else has built it, why is this the right time to build. All of these questions you'll have to study. Again, enough material available. But my pitch deck, so I had a problem with the pitch deck, right? I don't like pitch decks in general. I think they convey very little. So my first pitch deck was a 2-pager deck. I had written plain text for 2 pages. That this is the team, this is what we are trying to do, this is why we are trying to do it, this is why we think it will succeed, this is how we'll monetize it in the future whenever we monetize it, and this is why we are trying to raise. It was as simple as that. I did not have a design deck. Second time I made it, but I don't think the deck did anything. It was mostly about the founders. Till seed round, pre-seed and seed, the bet is on you, not on your deck, not on your idea, not on your industry. Some of it matters, but mostly it's on the entrepreneurs.
Got it. So you were you would tell people to make it in-house themselves the first deck?
I really recommend that because one time even I thought that, maybe let's just look at the rates. Some guy quoted me 1 lakh for a deck. I said that 1 lakh would bring me probably 10,000 users. I'm not going to give him that money. Simple.
Makes sense. Okay. Ayush has a question. He says, you seem to be a serial entrepreneur, but what about first-time founders? How can they show credibility in public eyes and to investors?
I am I'm not a serial, I'm just a second time founder, but Ayush, I am 25 years old, right? And my first company was built when I had no credibility. I was in college. Even then I had raised, right? So it doesn't really matter. The credibility will help a lot, but even if you don't have, do you have another option? Do you want to go back to, doing whatever else you were doing? You're here for a reason, right? You'll find ways to convince people. Again, it's mostly about communication skills, conviction in the idea, and how do you navigate social situations when you're pitching, right? There'll be difficult questions. One of the questions that was asked to me in this one, the first round that I raised for Medial, was very tricky. There were moral and ethical questions. What do you do then? You might know everything about your business, but they try to test whether you're a good human being or not. And the line is very blur in those questions. So it's mostly about, pitching. I don't think credibility will kill all your chances of getting funded. That should not happen. That does not happen.
Got it. Maybe one time you can take a session of how, when you did your first startup, how did you even build that, validation and credibility in their eyes?
Yeah.
Avi has a question. How to get around the question that your startup is too early?
Maybe it is too early, right? Like if everyone is saying it, then you need to introspect, right? Again, I don't understand. Is it too early as in whether you have not built enough, or is it too early as in it's ahead of its time? Those two are different
I
questions.
think it's more on terms of like, are you too early going for fundraising at the moment?
Yeah, that is fine. But if you have built conviction after all your research, in this case, I would ask you to, the best way to go about it is go and talk to entrepreneurs in that specific field who have built these kind of products and ask them, should I raise funds? They will give you the right answer because they are not investing, they have nothing to lose, right? Just talk to the top folks in the ecosystem. Just tell them, I just don't need your money, I don't need anything. Reach their office. Advice is free. Reach their dharna de do wahan pe, like sit with the label that I want to talk to this guy. Until I don't talk to him, I will not go away. And just ask him, should I be raising right now? When is the right time? You get your answers. I will not be able to answer it. The domain expert will be able to answer it. I've done this all my life. Nobody has said, even if people say no, I somehow find a way to get to them.
Got it. Strong networking skills as a founder. I think that's anyway very important.
It's persistence. Yeah. I mean, just don't give up there. It'll happen.
Awesome. Okay. There's this question from Afan. You want to read it? It's a little long.
Yeah.
Afan
has... I'm reading it. Afan, in this product, you can choose to launch. You must have credits for AWS from Rize. So I guess there is no major cost as such. This product will have to either be very viral or very retentive. And in both the cases, whenever you build any kind of metrics, that will be the right time to reach out to investors, because mostly even in consumer internet for our kind of businesses, it does not happen without traction. You need traction. Even if the data is small, at least something gets cleared, right? So I would suggest to launch it. Sounds very interesting. Launch it, try to do as much as you can bootstrap. But when you have a data of, let's say, 1,000, 2,000 users who are daily actives, or let's say 500 daily active users, you will get a sense of whether your product is working or not. And even they will take you more seriously, right? And one general rule is that you should never approach VCs. If you yourself go and DM them on LinkedIn, yeah, they might entertain you. Mostly analysts will, right? First of all, never DM analysts. Those conversations never mature, right? Ideally, try to get a meeting with a partner or a senior person, and this should ideally not happen directly. You shouldn't reach out to them. Ask someone else to introduce you to them, right? Arjit himself can introduce you to like 50 VCs. Now, don't go and spam him. But ideally, if he likes you and you are on talking terms, you should ask him for introductions if possible. Again, nobody owes you anything, but you can ask for help, right? Email introductions even can help a lot, right? I have tried never to contact a VC ever in my life. They should come to you somehow or the other, or you should be connected to them to someone. That is the best way to do it. Go to networking events, find, again, that is why talking to founders is one of the best things you can do. If you talk to the right founders who have raised from a certain VC, they will connect you with them if they like you, right? If you don't completely come out as a jerk to them. So that is how networking can help, right?
Makes sense. We do a lot of VC mixers also. I think I should attend those.
Oh yeah, they're awesome. Free food, free drinks, and VCs. What else do you want?
Yeah. Karthik has a question. Hey Niket, are the multiples same for B2B SaaS and B2C SaaS?
I think they're lower for B2C SaaS because B2B is takes precedence, right? Sales driven. But B2C, if it is PLG, like product led growth, then things might change. Again, I'm not a domain expert. I wouldn't like to comment, but that is what I have heard or I know.
Yeah. Okay. We have Dheeraj who has a follow-up question. Since we are a B2B2C company, how should we market ourselves so that we become more investment ready without a big ARR? Or is it advised that I have some kind of ARR to get funded in this space? Industry is legal tech.
Okay, I totally lost the question. Can you tell me where it is? Who is this? Dheeraj, right?
Yeah, Dheeraj.
We are in B2B
My vakil.
company. How should we market ourselves so that we come to know without a big ARR? Or is it some kind of ARR to get funded in the space, industry, legal tech? So here, either you have to build your ARR or you have to have a competitive moat that you can raise on. What is a competitive moat? Maybe some kind of tech, some kind of advantage in general. Usually it's tech-based advantage that nobody else has or has figured out and will not be easily, or they will not be easily be able to build this, right? Very fast. So either that will get you funding without the ARR or else the ARR will get you funding.
Okay. Okay, folks, we'll just take one or two more questions and then we're done for today. Avi Agarwal, I'm planning to raise from angel investors. Should I approach the CXOs of companies who can be also considered as our distant competitors?
Yeah, so mostly senior level folks would have a non-compete and they are usually barred from investing in competitors. It can get legally troublesome to them, but a lot of folks don't have these agreements, right? So it might be a great strategy to do, but a lot of folks might or might not, depending on what kind of terms they have signed with their companies, right? So for example, when I was raising a round, it was very clear by my investor that I will not be able to invest in any other professional network while I'm serving as a CEO of Medial, right? Because otherwise I might just tell them tips, tricks, or data or whatever, right? Because personal incentive. So this happens with a lot of CXOs. But yeah, whoever hasn't signed that kind of a term, you can raise from them. Sounds like a good idea to me.
Got it. Okay. Okay, we got one last question. What is the average time to get funds?
What you should consider is that from the day you start or the month you start fundraising, it might take up to 6 months for the money to hit the bank. Again, pre-seed seed it might be earlier or it might just take 6 months, but it shouldn't ideally take more than 6 months. Also, while fundraising, I would suggest that whoever is fundraising, ideally the CEO, right, the key man of the company, they should be free from a lot of other things so that they can focus on fundraising. It takes a lot of toll on your mental health because you get a lot of rejections. Also, it takes a lot of time, strategy, crafting your pitch, crafting your deck, crafting your words. So you should think that, okay, I will build this product from this month to this month. And then January onwards, if you're starting to fundraise, then you will focus on it for the first 2 months at least deeply so that all your conversations can start. Now, these started conversations will flow for a long time and then eventually convert. Also, a general advice that you cannot raise in November or December. All VCs are partying on some island in November and December. So they generally get back in Feb. So Jan, mid or end would be the right time to start raising. Just avoid, or before that, it would be August would be the right time to start raising. Otherwise, they will just slip out in October, November, and December, right? They just do not take calls or meetings. They don't want to work in those 3 months, mostly. Don't quote me on this.
Okay, as we said last
I have one question for you. One is that When is the next weekly mixer?
We'll let you know on that. We'll let you know on that. But just one sec. We got 2, 3 more questions, Niket. Do you
Sure,
have
sure.
time?
Yeah, sure.
Okay, so we'll pick that up.
Manik, hey Manik, sorry to cut you in. I just had a follow-up question on what Niket told. So I just want to understand what is the process for uh, the the money to flow into your bank account. Basically, a few preparedness if that is necessary.
Yeah. So ideally, if you are a revenue generating or an operational company, so for example, in my case, I didn't have a company, right? So what DD will they do? It was on an idea stage, so no DD happened. But usually, if you're operating, or if you have a bank account, or if you have a company, or if you have been spending money, or I don't know, earning money, they would want all bank statements, MIS basically, right? They will, if you're a tech company, they'll do technical DD, right? So the first step is that they agree. They send you a term sheet, then they start DD, technical team, balance sheet, whatever. When that gets completed, the SSHA is drafted, right? SSHA is basically, term sheet is non-binding, it's not legal. But then SSHA is the document which formalizes everything. The share transfer happens. And once the SSHA gets done with, then after that, you can expect the money to be in your bank in a week or two, depending on how much capital the VC has. So VCs also don't have a lot of money together. When you hear that they have raised a $600 million fund, they have not got it in their bank account. It keeps getting transferred as and when required, right? So yeah, that's how it looks, the steps, right?
Okay, awesome.
Thanks, Niket.
Yeah.
Okay, I'm gonna just take this, and folks, we're done after this, right? Niket, Anushank has a message.
I'm
So
reading it, yeah.
yeah.
Do you think copying this product and building on top of it would put us in a bad light? We are an edtech company building an AI lab assistant for science and math simulations. What we have done to move fast is copied science and math simulations from a US-based company and put a vision AI model top to us instrument. I think copying. If you have innovated yourself too, inspiration is fine, right? And see, dude, I mean, nothing in the US is enforceable in India. First of all, it's not illegal, right? Secondly, inspiration is fine. If I'm building a social media app, am I copying LinkedIn or I don't know, Facebook? It's a social media app at the end of the day, right? So it's fine. Investors don't see it in a bad light. In fact, a lot of them, most of them are very interested if you are bringing a foreign idea which can actually work out in India and implementing it fast enough. You will be in a very good situation. So don't think of it. Never agree to that fact that you are copying, even if you are copying. Simple. In case you are right, like it doesn't matter. Nobody gives a shit about copying. Everyone copies left, right, and center.
Okay, cool. Okay, folks, there's also Ishita has launched a poll. Just take 2 seconds. Help us fill the poll. It'll be really helpful for us to plan future sessions like this. Okay, Nitya has one last question. For fundraising, is it better to... Okay, cool, you answered it. Awesome. Thanks, Niket, for taking out time today. It was really helpful. I think everyone really enjoyed it. We'll also have a recording of the session, so we'll try and share snippets within the community for them to get some insights. Folks, if you can just put on your camera for like 1 second, we'll take a quick picture. I'm gonna wait. Okay. 1, 2, 3. Perfect. Cool.
Thank you for having me, guys. Lovely talking to everyone. I understand the phases. I was there like literally a year ago, and it will be fun. Hope everyone builds a great company. Let me know if you need any help from me. My email ID is niket@medial.app. I'll put it in the chat, and I would be happy to assist you if I'm capable of that.
Also, Niket's on the community group, so y'all can also just directly reach out to him and ask your questions whenever needed. But thanks, Niket. Thanks, everyone, for joining in on a Wednesday evening. And I think it was really insightful and fun. So we'll do more of these in the near future.
Sure.
Bye-bye.
Thanks. Thanks.
Bye-bye.
Thank you. Bye.
I'm going to end the meeting in 2 seconds. If you all have the poll in front of you all, Please fill it off before you leave.